Welcome to Second Take, the show that takes a look at the issues behind the news. The 30% reciprocal tariffs imposed on South African exports to the US are in force. Terence Creamer joins me to discuss how government and businesses plan to navigate this new reality. Hi, Terence.
Hi, Chanel.
This represents a big change for South African-US trade relations. What are the likely implications?
Yes, as you say, it's a massive change. Obviously we had an era where South Africa was sanctioned and we were a lager economy. But since democracy in 1994, we've really had sort of an opening up of the economy. We are an open trading economy as South Africa. We always have been a big trading economy because of our mineral exports. But in 2000, the Americans made a sort of a very good offer, unilateral offer, to African countries that we were eligible for AGOA. And since that time, and it's been renewed a number of times, we've had a lot of very good access, duty-free, quota-free access on a number of products through AGOA. Plus we've had most favoured nation access on a lot of other products. So we've always had a good trade relationship with South Africa. We generally run a surplus with America, and this is the issue that Donald Trump is particularly fixated on. But it's because they need some of these products in terms of the minerals that they don't mine themselves, for instance. And then there've been other ones where it's been good in terms of beneficial for South Africa around our exports, in particular of agricultural products and automotives, more recently in automotive components, and America has been a good market for South Africa. So the implications are significant. It's about 8% of our exports clearly, so it's about, I think, EU biggest bloc, then China, then the US, so this is an important market. There are a number of exemptions that remain in place, particularly around mineral products, but we also have other tariffs other than the reciprocal tariffs that affect us on steel and aluminium at the moment. So these are already kicked in, and on automotives, those are already kicked in and are separate to the reciprocal tariffs. And we've been living under that, and we are seeing those shudders in the South African economy. But there's a particular worry now that that sort of companies that are exposed to exporting to this market, they're potentially about 2 billion worth of trade that could be affected, that could be lost, and about 30,000 jobs that could be lost. So it's a major change for South Africa's relationship with the United States. It has major implications, but it's not across the board. It's really those sectors and those companies that are particularly exposed to US trade. So it's not the whole of the South African economy.
How has South Africa sought to tackle this threat since the tariffs were first announced, then paused in April?
Yes, so that Liberation Day announcement of April 2 sent shockwaves around the world, including inside America. And I think there was a move then to pause, as you say, because I think the view was this is going to be too damaging actually for the US economy. And there were a number of negotiations that also took place. And there was a view, that Trump could pull back. But by August by July it became clear they were going to pursue these tariffs, and that only handful of countries actually had done a deal by the time sort of the deadline was looming of August 1. So the UK got a deal. Nothing is as good as what everyone had before these tariffs were announced, but they got a deal, the EU got a deal, there was a sort of deal with Japan, and the rest of the world were trying to negotiate with the US. So our stance was always we need to talk. And then there was the famous May meeting in the Oval Office between President Cyril Ramaphosa and Trump. That didn't go very well, but there was an associated meeting where we made a framework agreement offer that had a number of elements. These are some long-standing sort of bugbears that the US had around our trade, particularly around the three meats of beef, pork and poultry. But there were also issues around blueberries and other agricultural products that we made a willingness to negotiate. We also suggested we would buy liquefied natural gas from the US as we sort of as our supplies wane from Mozambique and we're looking to increase, for instance, gas to power supply. There was that offer made which raised the number of eyebrows because it didn't seem like the best location to be sourcing LNG, but be that as it may, that offer was made, plus a number of things that we thought we could do with the US around investments. We do invest in the economy. We've got 600 US companies that have invested here, and sort of doing joint investment. So that was our approach. We thought we could negotiate our way out of this, but that Oval Office made it also clear that there were other issues, not only the trade issues that I mentioned that were bugbears, but other issues came up around farm murders and around South Africa's transformation legislation and land expropriation. So we haven't reached a deal, but we do know that the lines of communication still seem to be open because President Ramaphosa had a call this week with President Trump, and there was an agreement to keep the lines of communication open despite the fact that Washington time on the 8th of August the tariffs kicked in at midnight or just after midnight.
What is the strategy now that the tariffs have been imposed?
So it's two-pronged. They'll be putting out a lot of effort to continue negotiating and showing an even keel, trying not to raise tempers or temperatures any further than they already have been raised, trying to say that there is a possibility for a lot of mutually beneficial trade. We're particularly highlighting for instance, the citrus being very counter-seasonal, that it actually helps lower the costs for American consumers and businesses that rely on that citrus, and that the oranges, or for instance the citrus industry in the US can't produce at that time. So there's been a lot of sort of explaining that this is good. We've got these mineral products that are generally exempt, and then I think try and get a deal that's more or less in line with what the Europeans and the UK have done around other products. I think that's the sort of aim. We're not going to go back, it seems, to, even though AGOA is officially not dead, it feels like it. And we're not going to look like we're going to go back to that sort of tariff-free, quota-free arrangement on the other tariff lines that were captured on it. So there's the continual view that we can maybe get this reviewed and in some ways not set aside, but made softer, and maybe particularly important where we can get relative to peer markets. We're on the higher side, 30% is on the higher side, and some of our other exporters, for instance, automotive components and automotives, have got deals like the UK and the European unions that are lower than ours. So now we're at a relative disadvantage, say for instance in agriculture and in automotives, even though the automotives come, as I say, not through the reciprocal route. But we would like to get a deal, so we're going to carry on talking, but the reality is now the tariffs have been imposed, so we have to live with that reality. So there's a scramble now from government, from quite a weak position really, because we don't have fiscal space, we don't have fiscal strength. So the view that there's going to be a lot of sort of support coming through to these companies and workers, there's a limit to that. There will be support, and there are existing schemes. As we saw during COVID, the TERS scheme was rolled out. I imagine there'll be something for these companies that are affected in the labour side to try and keep people employed. On the production side, there already are a number of incentives that the DTRC offers, but maybe they will tailor them specifically to these companies around working capital, etc., investment, putting in investment at lower cost than it would be without those incentives. So there are those. There's this export desk that has been set up immediately to help really exporters find alternative markets. And ultimately, in the medium to longer term, that's what the game's going to be about. That is trying to find these alternative markets for our exporters. A lot of store being put in the African Continental Free Trade Agreement, which is only just getting started, and it's relatively small fry, but it is probably the future for South Africa. We've got, as Africa, we do too little intra-regional trade. We generally don't trade with each other, we trade with others. So there is a lot of store should be given to that, but it's really not an immediate answer. It's more of a medium to long-term answer. And then we obviously have all, like the rest of the world, we're all going to be forced to look east towards China. That's the sort of ironic, position from what Trump has put the world in. And we've made a negotiating offer to China around that relationship and the way it can be more symbiotic, because at the moment it's quite uneven, and generally, really, we send low-value products out to China and we import high-value products in from China, and the balance is not good, whereas we had a good balance with the US. So trying to maybe even out that relationship a bit more. I think there's a view that a lot could happen around the agricultural products. A lot more could happen with China because, again, a counter-seasonal market, but they're also surrounded by Asian countries that are also looking to enter China. So there's all those elements. So it's two-pronged. Talk to the US, try get a better deal than what we've got. 30% on the higher side. It puts us at a disadvantage to our peer countries that are trading with the US. So we need a deal that gets away from that 30%, at least puts us in line. And then obviously this as much support with a very weak national balance sheet fiscal position, as much support as we can give to workers and to factories, and then in the longer term trying to open up to new markets.
Thank you. That's the Second Take show for this week. Thank you for watching, and join us again next time for more news analysis. Also, don't forget to listen to the audio version of our Engineering News Daily email newsletter.